Sacre bleu! Qu'est-ce que c'est que ça? Well, unless you're the only person left watching Big Brother Celebrity Hijack, you'll know that France's second largest bank, Société Générale, have had old 31-year-old French futures trader, Jerome Evil Kerviel, gambling away 60 billion of his employer's money, losing them nearly 4 billion. Analysts are blaming his actions on sending brown trouser tremors round the stock market that wiped 80 billion off share prices here and in the USA. Why? How? Well, that's what you want to know, and ours is going to tell you. Trading is one of the most coveted jobs in the financial markets. A good trader can make tens of millions for their company, and that converts into big bonuses for them to spend on coke, prostitutes, and West Ham tickets. Get in there! It is a stressful job. One wrong move and your profits can be wiped out, your reputation destroyed, and your job gone. Traders at the big investment banks, such as Soc Gen, will be organised into units or desks based around different financial products, including bonds, stocks and currencies. Using the bank's funds, the more experienced traders will be able to take bets, or positions as they're known, on which way they think the price of a particular product is going. That's a futures contract. It's informed gambling. Simply put, a trader will promise to buy or sell a product at a certain price and at a certain time. For example, if a trader thinks the price of bananas is rising from £100 a bunch, he might promise to buy bananas at £100 a bunch in 3 months' time. If he's right, and the bananas rise to, say, 150 quid, then he's made 50 quid. But there's a problem. If the bananas fall to £50, then he'll have to pay the difference and shell out 50 quid himself. It's a lot like people buying houses on the hope that the price of property will keep rising. In reality, a fast-changing market means a trader can see his profits wiped out in seconds and his position quickly plunge into a loss-making zone. So the banks have checks to make sure that they don't get into serious trouble. Traders will have managers who will monitor their staff's activities. If they think a position or bet is too risky, they'll tell the trader to close it. There's also a unit known as the back office. These are non-trading staff who calculate the day's trading and try to work out how much the bank is making or losing. Senior managers will look at those numbers and make sure the bank is not taking on too much risk. But the system can break down, as in the case of British bank Barings in 1995. There, Nick Leeson was able to hide huge losses, as he was the trader, the manager, and he looked after the back office. This week's French losses are 4 times greater than those made by Nick Leeson, who eventually had to endure 6.5 years in jail, and worse still, watch Anna Friel play his wife in the film Rogue Trader. In the case of Soc Gen, the bank said the trader responsible for the fraud had in-depth knowledge of the control procedures resulting from his former employment in the middle office. What's really odd is executives say the trader may not have sought personal gain from the fraudulent deals. Some say he may have been under stress at home, some say he was mental, others say he was holding out for a big bonus, and some say that he got an adrenaline rush and it helped massage his ego. Well, come on, he is French after all. Whatever the reason, the reputation of this and other banks is now looking as precarious as, well, betting on the price of bananas. Your man at street level, over and out.